Benefits of the C Corporation. Most corporations start off as a C Corporation. Unless the shareholders elect to be treated as an S Corporation, the C Corporation is seen as a separate entity for purposes of taxation and is responsible for its own taxes. In fact, the C Corporation has its own tax brackets, which in many cases are lower than individual tax rates. Like S Corporations and LLCs, the C Corporation offers protection of personal assets and limits personal liability. However, there are some key differences. Corporate losses are not passed to shareholders. Generally, corporate losses stay in the corporation. They cannot be deducted by the individual shareholders. On the other hand, in the pass-through entities, such as S corporations, LLCs, and partnerships, business losses can be deducted subject to certain limitations. Minimal restrictions on ownership. Almost anyone can own corporate shares and there's no limit on the number of shareholders. Also, there may be different classes of stock, granting different owners different rights in profit and loss distributions. Plus, it's really easy to transfer shares. Lower tax rates encourage reinvestment. The C Corporation is a separate entity responsible for its own taxes. In fact, corporate tax brackets are often lower than individual tax rates. Thus, a business that wants to reinvest its profits often will prefer the C Corporation because the profits are usually taxed at a lower rate. In an S Corporation or LLC, the individual owners are still liable for taxes owed on profits that are left in the business for reinvestment. In other words, even when there is no distribution of money to the owners of an S Corporation or LLC, they still will be liable for taxes on that money. Who prefers the C Corporation? In general, the C Corporation is the preferred entity for businesses where the number of owners may be greater than 100, venture funding is desired, equity financing is sought, where owners may not meet the requirements for S Corporation qualification, or where profits are expected soon and will most likely be reinvested in the business. This is usually the preferred business structure for businesses seeking funding from different sources such as venture capital and equity financing. Starting a business is a big step, and selecting a business structure will have an impact on your tax liability. Talk to your accountant or your attorney to determine if the C Corporation is the right business structure for you. And when you're ready, call CorpNet and we'll incorporate your business for you. We'll do it fast, we'll do it right, or your money back.